Hello, everyone, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that are currently moving prices, with a key focus on what happened yesterday and what to expect today. So yesterday was the biggest day of the week, not in terms of hours, but in terms of news and price action, where on one side we saw gold hitting a new all-time high and the US dollar index sliding lower after the Federal Open Market Committee FOMC meeting, where the Fed decided to hold rates steady at between 4.25% and 4.50%. And then later on, we had the FOMC press conference, which provided clarification on oncoming monetary policy in the US. So outside of that, we'll also be covering other news, currently moving markets. And once we do that, hopefully everyone will be trading from an informed perspective. So let's begin with the economic calendar. And from what we can see on the economic calendar, there has been, sorry for that, there's been quite a number of developments. So on one side, the Bank of Japan decided to hold rates steady at under 0.50%. So in the monetary policy statement, the Bank of Japan Governor Kazuo Ueda maintained several policy instances. So on one side, he said that the next policy decision, remember, they're still looking to hike interest rates later in the year. The next policy rate decision will depend on the data that they get from the economy. And also, he expressed concerns about the impact of Trump's policies, especially the trade tariffs, where he has hit several economies hard. So far, Japan has not been hit that hard, but the threat of reciprocal tariffs is still considerable, and he is looking at the developments of that policy. So if Trump eventually implements the reciprocal tariffs as well as the 25% tariffs on steel and aluminum, this would eventually impact Japan, and as a result, they'll be looking to respond to that. So later on at 1 p.m., we had inflation data coming in from the Eurozone, where final core CPI came in as expected at 2.6%, same as the prior month. But then for final CPI, there was a surprise drop to 2.3%, which was lower than the expected 2.4% and lower than the previous number, which was 2.5%. So when you see inflation dropping, it basically means that the ECB, or the European Central Bank, has more room to continue cutting rates, and as a result, we expect to see further weakness in the euro. So then we had crude oil inventories at 5:30 p.m., which came in at 1.7 million, a surprise increase compared to the previous reading of 1.4 m and at the expectation of 0.8 m. So further increase in crude oil inventories basically means more supply in the markets, and as a result, we expect much lower prices. So the main event was the interest rate decision by the Fed. They decided to hold rates steady at a range of 4.25 to 4.50. And then later on, we had the FOMC press conference. So during the press conference, this was the first time we saw Jerome Powell basically projecting that inflation will be on the rise again. He basically brought up the transitory factor. So he said that the inflation is still transitory and it may remain high as a result of Trump's policies on tariffs. So as a result, we had increased volatility in the markets and concerns that the US economy could significantly slow down and potentially get into a recession. So the Fed members submitted their Fed dot plots, and so far they are still projecting to have 2 rate cuts later this year. So as a result, what we saw yesterday was US equities are basically recovering from the sell-off we had seen in the previous day. Gold moved into a new all-time high, and the dollar index slid further against a basket of other currencies. So at midnight, that is 12:45 a.m., we had GDP coming in from New Zealand, a surprise uptick of 0.7%, higher than the expected 0.4%, and this is quarter over quarter. And this was a surprise change from the previous reading, where we had negative 1.1%. Then fast forward, we had job data coming in from Australia, where we had a surprise number, a drop of negative 52.8k jobs, meaning that net over the last 1 month, the Australian economy lost 52k jobs versus an expectation of 30.8k jobs created. So this was a big news, showing an immense weakness in the labor market in Australia. However, for unemployment rate, it remained the same. Then we had the Chinese interest rate decision. This was at 4 a.m. So there was no change. It all came in as expected. The 1-year loan prime rate remained steady at 3.1%. The 5-year loan prime rate remained at 3.6% as expected. And now at 10 a.m., we had the claimant count change from the UK. So a surprise increase in the number of jobs created in the past month, with 44.2 thousand jobs. Sorry, not jobs created, but mostly jobs lost. So these are the number of people who are claiming for unemployment insurance. That surprise of uptick of 44.2k. So it's a worsening job market, where we expected an increase to 7.9k, but the increase was much bigger to 44.2k. So this is over 5 times the expected amount, meaning that there was a record number of job losses in the UK in the month of February. And as a result, the average hourly earnings increased as expected by 5.8%. And this was slower than the previous reading of 6.1%, meaning that the wage growth is slowing. So unemployment rate remained at 4.4% as expected, and now we move on to the expected events of the day. So first, as we started this session, the ECB President Christine Lagarde is currently in a speech. This is still continuing. She is testifying before the Committee of Economic and Monetary Affairs at the European Parliament in Brussels. So we'll be following that closely to understand her view on the Eurozone economy, as well as her responses to President Trump's tariffs. So at 11:30 a.m., that is about 11 minutes from now, we'll be looking at the SNB interest rate decision, where we're expecting the Swiss National Bank to cut interest rates by 25 basis points to 0.25%. Of course, this is expected to be weakening for the Swiss franc. So later on at 12 p.m., we'll be having the SNB press conference. So this is supposed to have a big impact on the CHF pairs. So expect increased volatility and, of course, a couple of opportunities to make some quick trades. So later on, we'll be having the Bank of England making an interest rate decision, and this will be happening at 3 p.m. So the overall consensus in the market is that the Bank of England will not change interest rates. So we expect them to hold at 4.5%. And as for the votes, we know that there are now 9 voting members in the Monetary Policy Committee in the UK. So in the last decision, there was a unanimous vote where they all decided to hold in interest rates steady at 4.5%. Sorry, not steady, but for a cut. So in the last meeting, they cut rates by 25 basis points from 4.75% down to 4.5%. So as of this meeting, we're expecting 7 members to choose to hold, while 2 members are still pro-cutting rates. So we'll be seeing a shift in the number of members who vote, with 7 deciding to hold and 2 going for a further rate cut. So that is expected to bring in more clarity. So later on, the speech by Bank of England Governor Bailey, this will be at 3:30 a.m., will provide more clarification on the monetary policy by the Bank of England for the UK. So at 3:30 p.m., we'll still have the unemployment claims as well as the Philadelphia Fed Manufacturing Index impacting the US dollar as well as the current account of the US. So this will be the big mover for US dollar traders. Then later on, Bank of Canada Governor Macklem will be speaking at 7:50 p.m. And as we head into Friday, we focus on Canadian retail sales as well as core retail sales. So clearly, those are the big movers, with the wild card being President Trump, who has been impacting the markets from his every decision as well as his every address to the media or to the public. So we'll also be closely monitoring that. So on other news, give me a sec. So it's an update on the same. Transitory is back as the Fed doesn't expect tariffs to have a long-lasting inflation impacts. So economic projections the Fed released Wednesday indicate that while officials see inflation moving up this year more rapidly than previously expected, they also expect the trend to be short-lived. So for the Fed members, they expect that after Trump initiates the tariffs, the respective countries will come to the negotiating table and then they'll end the tariffs, which would return things back to normal. So we already saw it happening with Canada and Mexico. The first time Trump implemented these tariffs, Canada came to the table, Mexico came to the table, they renegotiated, and then they pushed the tariffs forward. So at some point, we expect them to get into an agreement that would allow them to operate without the tariffs, and that would be a favorable situation, and it would see prices resume back to normal. So the position is significant with markets concerned that President Donald Trump's tariffs could spark a broader global trade war that again would make inflation a problem for the US economy. So back in 2021, when inflation first rose past the Fed's 2% target, Powell and his colleagues repeatedly said they expected the move to be transitory, a position that backfired. So in this case, when we see the transitory term coming back into the markets, I don't think the market tends to believe them as they say. So the good shape transitory, despite an ominous record, appear ready to sail again for the Federal Reserve. Economic projections, the central bank released Wednesday, indicate that while officials see inflation moving up this year more rapidly than previously expected, they also expect the trend to be short-lived. The outlook spurred talk again about transitory inflation that caused a major policy headache for the Fed. So as we all know, this is causing an increase in inflation in the US. That's the Trump's tariffs. And as a result, there are even some investment bankers who have decided that they do not expect any further rate cuts by the Fed for the year. And as a result, they are placing their money where their bets are. So in this case, it basically means that if there's no expectation of further rate cuts this year, then perhaps we could be seeing the dollar index beginning to recover. And at the same time, we could also be seeing the stock market remain subdued. So that may explain the current strength and rally in gold, as investors don't believe that inflation will be moving further downwards and the Fed could cut rates further, considering that prices are only increasing. So on this other end, the UK posts strong wage growth ahead of the Bank of England rate decision. So UK pay growth remains stubbornly high. We have seen it at 5.8%. So we expect this wage growth to continue increasing given the current fiscal policies in the UK. So UK wage growth held at its highest level in the 9 months, and unemployment rose, evidence of resilient demand for workers that will likely keep the Bank of England cautious of further rate cuts. So average pay, excluding bonuses, rose 5.9% in the 3 months through January, the Office of National Statistics said on Thursday. Towards in line with economists' expectations, private sector pay growth, the gauge being watched closely by the Bank of England, eased modestly from 6.1% from 6.2%. So there was little sign of big job losses materializing as feared following a hike in unemployment costs in Labour's first budget. So tax data showed the number of payrolled employees rose to 21,000 in February, defying expectations for a fall of the same size. The measure is flat since October, when Labour announced a £26 billion or $33.7 billion hike in payroll taxes and another hefty rise in the minimum wage. So coming just hours before the latest Bank of England decision on Thursday, the figures are likely to entrench caution over lowering interest rates, from restrictive territory too quickly. The Monetary Policy Committee was given an early look at the data before their meeting. Some rate sellers are concerned over recent quickening in pay growth, with surveys suggesting that firms plan to press ahead with more large wage hikes in 2025. So vacancies were up 1,000 compared to the previous 3-month period, the first rise since the second quarter of 2022, while unemployment held at 4.4%. So when you see job vacancies increasing in the UK, it means that companies are basically competing to offer the highest wages in order to attract talent. And as a result, we are seeing an overall increase in wage growth. And this is pushing the Bank of England to consider caution before further cutting interest rates. So in this case, the overall expectation for the day is the Bank of England holds interest rates steady. But then from the monetary policy statement and the Bank of England Governor Bailey's speech later today, we'll have a much clearer view of the oncoming monetary policy from the Bank of England. So overall, I would say we are a bit neutral on the Bank of England, with the overall expectation that the pound continues to strengthen against peers since it has one of the highest interest rates across board. So just to highlight the same issue, so if you look on this side of this particular chart, just below this black section here, you'll notice a comparison of interest rates across major central banks, where the pound has the highest interest rates at 4.5%, closely followed by the US, 4.5% being the upper limit, Australia 4.1, New Zealand 3.75, Canada 2.75, the Eurozone 2.65%, Swiss franc 0.5%, and JPY 0.5%. So with the UK having one of the highest interest rates in the market, then this creates a base case for the pound to continue moving higher. So on other news, the arrival of the tariff inflation. Powell doesn't shy from linking trade to prices as Fed shifts forecasts. So Jerome Powell did not shy away from the impact of President Trump's tariffs during a highly anticipated press conference yesterday. So the Federal Reserve Chairman said in no uncertain terms that Trump's agenda would be likely to drive up prices, even amid considerable uncertainty about exactly how much and whether the price changes would be transitory. In just one example, Wednesday afternoon, during a question about price stability, Powell said that inflation had previously neared the Fed's key goal, but now I don't think with the arrival of the tariff inflation, further progress may be delayed. So it was just one of the numerous comments from the central banker that contrasted with past meetings, where he often declined to weigh in on the topic in detail. So the remarks from Powell came after the Fed on Wednesday decided to hold interest rates steady and maintained a prediction of 2 rate cuts later this year. What the central bank did change was its outlook on inflation higher and economic growth lower. And those upward inflation adjustments, Powell said, are really due to the tariffs coming in. So in this case, the Fed expects the US economic growth to slow down, and this basically means that there is a risk of some form of recession happening in the US economy this year. And at the same time, prices are expected to move higher. So with that expectation, then the net Fed decision was to hold interest rates steady. And we could be seeing the Fed holding rates steady for the next couple of meetings. And as a result, this could be a base case for the dollar to start recovering. But then for equities, which have been betting on further rate cuts for them to rally, I believe we could be seeing some further downside momentum. So some analysts raised questions about the Fed's unchanged overall prediction of 2 cuts this year, even as term state policy has rallied markets, and cut back projections of economic growth for the remainder of the year. We continue to think that Fed officials are underestimating the extent of which tariffs are likely to push up inflation. And this is from Capital Economics in a note immediately after Wednesday's decision, but before the press conference. Trump has already levied new duties on China, Canada, and Mexico, as well as on steel and aluminum in his first months in office, with a key deadline on the 2nd of April, threatening reciprocal tariffs that could be historic in their breadth and scope. So April 2 is expected to be a big day for the markets because reciprocal tariffs will affect every nation that trades with the US, potentially every nation that applies tariffs on US goods. So this could bring increased volatility on the 2nd of April. That's about 12, 13 days from today. So clearly the markets are very concerned, and as a result, we may see gold moving higher with yesterday's and this morning price action pushing gold over 3,050. So outside of that, gold scales record peak as Fed signals 2 rate cuts in 2025. So gold touched an all-time high on Thursday as the US Federal Reserve signaled 2 possible interest rate cuts this year, adding to the bullion's appeal amid ongoing geopolitical and economic tensions. Spot gold held steady at 3,047. We already know it has a hit above 3,050 an ounce after hitting a record high of 3,057 early in the session. So US gold futures gained 0.4% to 3,054. So gold is driven by a lot of uncertain market situations, geopolitical tensions, weaker US dollar, and expectations that interest rates will be cut later, said Dick Boone, general manager at Harius Metals Hong Kong Limited. So on Wednesday, the Fed left its benchmark rate unchanged in the 4.25 to 4.5% range, as was widely expected. Policymakers anticipate 2/4 percentage points cuts by the end of this year. So non-yielding bullion thrives in a low interest rate environment. So we expect that there will be more further rate cuts in the year. That is according to the Fed. But personally, I think inflation is being underestimated as a result of Trump's tariffs. And as a result, we could be seeing steady rates towards the end of the year. So the uncertainty coming in from Trump's policies, the expectation of reciprocal tariffs, combined with the geopolitical developments, especially in Iran as well as Iraq. Now we also consider the potential peace deal between Russia and Ukraine. All these uncertainties are driving gold prices higher, including the central bank demand, as well as a Chinese private market buying even more gold. So the tariff uncertainty, rate cut possibilities, and escalating tensions in the Middle East have contributed to gold's rally, prompting it to notch 16 record highs so far in 2025, with 4 being above $3,000 milestone. So on Thursday, that 7 Palestinians were killed in Israeli airstrikes across Gaza from Israel after Israel resumed its bombing campaign. For now, gold's appeal as a safe haven and inflation hedge has further strengthened in light of these geopolitical concerns and tariff uncertainty. We remain constructive on the outlook of gold, said OCBC Forex strategist Christopher Wong. Geopolitical and economic uncertainties underscore gold's role as a store of value. Given the very good performance in gold through Q1, I think a correction is not out of the question, said Nicholas Frappel, global head of institutional markets at ABC Refinery. So far, corrections have been relatively short-lived and well-bid. 3,090 and 3,100 may see some form of resistance. So what he's basically saying is that gold has been on a very strong bullish momentum, especially in the first quarter. And now, as we go into the second quarter, if gold gets to 3,090 to 3,100 price level, then we could see some resistance, some profit taking, and we see a correction in prices. So a correction, as we all know, is a pullback from a recent high by about 10%. So we could be seeing gold dropping further downwards after it gets to, let's say, 3,100. But as for now, and this week, we expect the bullish momentum to continue. So the Fed is in no rush to cut rates. Trump disagrees. So Trump administration's initial policies, including extensive import tariffs, appear to have tilted the U.S. economy towards slower growth and at least temporarily higher inflation. Federal Reserve Federal Reserve Chair Jerome Powell said on Wednesday, drawing the ire of President Trump. Trump posted rates on Wednesday on his Truth Social platform, and he said the Fed would be much better off cutting rates as US tariffs start to transition or ease their way into the economy. Do the right thing. So in this case, we are seeing Trump disagreeing with what the Fed is doing, with his overall expectation is that the tariffs would have a much better impact on the US economy and prices will drop. And as a result, he is pushing the Fed to be cutting rates. So for the first time, it's no longer speculation about the fight between Trump and Jerome Powell. And in this case, it's pretty open. Immediately after Jerome Powell's speech, Trump posting that the Fed should do the right thing, then we know for a fact that Trump is pushing for lower interest rates and Jerome Powell is holding rates higher. And now this deadlock is bringing some form of uncertainty in the market. And as a result, the overall outcome we are seeing in the market is some form of confusion where stocks are going up, then down, then down. Then this uncertainty is leading to a very strong bullish momentum in gold. So I believe those are the key highlights for the day. So let's jump on to some technical analysis. So hello, Lewis Mutembe, and shout out for being the first person to join in and comment. Hello, Paul Carey, Reno Hillary, Margaret Paran, Matilda, Charles, Robert, Nderi. Thank you guys for joining. I can see Vic, West, Topscade, Carol, all in the house. So good question here. Can gold still buy past 3,056? This is highly likely. Always follow the trend. The trend is your friend. So the trend clearly is a very strong bullion market. So a good question. What's the most promising pair to trade today? We'll be checking on that later in the presentation. So comment on Europe supposedly plan to on military spending and how it may affect the EU economy, Euro and DXY, especially with Trump's tariffs. So we'll also be looking at this. So the Eurozone is focusing on a very strong defense budget. And this is being led by Germany. They are looking to spend billions of dollars on strengthening their military and support for Ukraine because they want the war in Ukraine to continue. And as a result, this is expected to lead into deficit spending. So what you should be looking at is the impact of deficit spending on the Euro economy as well as the ECB. So we'll be trying to understand that. So when the S&P cuts to 25 basis points, will you be expecting the CHF to weaken by a huge margin? The fact that CHF is a safe haven, how much would it be affected considering the increase in geopolitical tensions? This is a good question. We'll also be looking at that. So I hope I'll remember this. So on one side, the euro, impact of euro and expansion in defense spending, then the S&P. USD has showed quite some resilience since yesterday with the Fed's decision and pressure yesterday. Can we expect the dollar to strengthen consistently going forward? No, Trump is still on the driving wheel and he's still pressing on more tariffs, and the biggest wave of tariffs will be happening on the 2nd of April. This is when we'll be seeing Trump releasing a sequence of reciprocal tariffs on the entire planet. And in that case, we expect these to be driving the dollar index lower. What about currencies that are paired with USD? Yes, we'll also be looking at that. So let's begin by doing some technical analysis here. So I will be sharing my MetaTrader 5 trading application. This is the app that we use to trade on desktop, trying to understand where the markets might be headed next. So let's begin with a very neutral asset, in this case, the dollar index. So yesterday's price action after the FOMC was a big sell-off in the dollar index. Then here we are seeing the dollar index being pretty much stubborn and making a very important recovery. And this is right after the FOMC meeting yesterday. So we are seeing the dollar index making an impressive recovery because investors are beginning to realize that the Fed will not be cutting rates in the near future, given the impact of Trump's policies, which is causing prices to increase. And the Fed cannot cut into inflation. So what we are seeing in the major currencies, for instance, Euro USD, which has been on a very strong bullish momentum, is a reversal and a double top formation. So if you doubt what I'm saying, just look at your chart and you look at the 1 hour chart. You look at the most recent high and compare it with the previous one. Then you will have this neckline here being the bottom that we saw previously. And this was on the 13th of March. And now we are seeing the double top formation playing out. Second bottom will be most likely hit here. So today's overall price action is expected to drive the euro weaker. We know that the ECB is not going to continue. It's more likely to continue cutting rates because inflation had a surprise drop in the last update yesterday. So in this case, a weaker euro, a strong dollar is a recipe for the price dropping to 1.08250. So as for pound USD, we have seen multiple days where the pound has really attempted to move higher, but all attempts have failed, and now we are seeing the reversal. So here, it's a market that had now joined some form of channel. Channel being that there was a slight upside momentum. And if you look at the lower side, you'll notice that this was the prevailing price action. And now we might be headed for a potential break. So key area to note is that this area here has been a key level support. But then judging from the price action we are seeing here, it's more likely that we will be seeing a break towards the lower side with the dollar strengthening. But also we could also be seeing the market bouncing from here. So the price action area to observe is right here. Once the market gets to around 1.29584, we could be seeing the market pushing back and going to retest the previous high. So that could be an idea, but also we could be seeing a break as the dollar index makes some form of recovery. In this case, we are not seeing the Fed going for further rate cuts, given the potential impact of Trump's policies. So it's a wait and see scenario. We observe the price action around 1.29584. So our USD currently on a very strong reversal. So in this case, if we do this and observe this particular trend line, then it basically implies that the market is headed much lower, and we could be seeing 0.63 being the target here. So 0.63. So not very far off from the current price action, but the current bearish momentum could extend, and we see the market retesting this lower trend line here. So as for USDN, we saw the yen being pretty strong last night and gaining against the dollar, and we had a big drop to this trend line. So we know that this has been the prevailing market pattern, a very strong bearish channel where the yen has been gaining against the dollar. And now that we expect that inflation could be on the rise and the Fed could be stuck with higher rates, then we are already seeing the market bouncing from this trend line here. And now we could be seeing a reversal from what we saw yesterday and the market getting back to this area. Remember, we have already broken above the trend line here, so potential for a continuation in that direction might be in play. And if you look at this week's high compared to last week's high, it's already much higher. This high is much higher than last week. So it's a market that is now going for higher highs and higher lows. So in this case, we could be seeing some further upside potential as the dollar makes a strong recovery. So Nikkei 225 index was on a big bearish momentum when the yen was strengthening. And now seeing the yen weaken to the dollar, we could be seeing the exact opposite. In this case, with the Nikkei 225 index making some form of recovery. So currently, it's not moving much. So we can't say that this market is pretty much directional. So it's a market that is more in some form of consolidation. So choppy, eventually we'll be watching for a break. So the break would be happening on either side, with myself pointing out that it's more likely that we see some break towards the upper side rather than towards the lower side. So in this case, I expect the market to potentially make a break towards the upper side, which would imply bullish positions. So as for gold, after hitting a new all-time high of 3,057 earlier this morning, we are seeing a mean reversal and a big sell-off since the market opened. So in the Asian session, there was an attempt to move higher, which drove traders to FOMO in. Then an attempt to pull back. This was during the end of Sydney. Then looking at the Tokyo session, the market stopped the people who had shorted here and then eventually dropped, and now we are seeing a free drop. So in this case, now we are below the day's low, and now we could be headed for yesterday's low, and this could extend all the way down, given the strong bullish momentum that we have seen daily since the week started. So notice on the daily, Monday was a bullish day, the green candlestick here, Tuesday and Wednesday, and today being Thursday, we are seeing some forward pullback, but then overall trend is still bullish. So if you're not shorting here, the idea is to be looking for buyers entering the market yet again. So we know that at some point the buyers will be back. So the idea is to be looking for a bullish position once the correction is over. So in this case, we should be looking for a buy position. We don't know exactly where the market will be bouncing from, but it would be much better if gold was to correct all the way back to 3,024. But then if we see evidence of buyers coming in, even at the current price action, then the idea is to still look for bullish momentum, because you don't want to be shorting in such a market that is so strong and consistently moving higher. So you can see yesterday there was an attempt to move downwards, which was immediately met with buyers coming in. So even today, as we continue seeing attempts to push gold prices lower, it basically creates opportunity to buy and drive prices higher. So we don't know exactly when this will be happening. It could be happening here. It could also be happening here, or even at a much higher price, maybe even here. So the idea is to look for evidence that buyers are coming back right in. So we don't have that evidence yet. So we remain bearish until that evidence is there. So Brent oil prices had a breakout towards the upper side on Tuesday, and then a breakout towards the lower side on Wednesday, and now we are right back into the same pattern. So with this being the case, then it's more likely that we could be seeing another breakout towards the upper side, in this case retesting the previous high. But then from yesterday's crude oil inventories, we expected this breakout to develop much further downwards. So for today, I would say it's still a wait and see, because we don't have a breakout yet, and we don't have a breakout here yet. But I have a sense that the next breakout could be final, and we get a clear direction on the on Brent oil prices. So it's so close to making that breakout. So let's just be patient and see which direction we take. So as for US equity indices, looking at the Nasdaq, we saw a very strong correction in this market. And then from there, notice that towards the end of last week, there was a choppy market. And then this week, we are still experiencing a similar thing. So this is one market that is really attempting to move higher since bottoming. So if this was the case, and we saw the market bouncing strongly yesterday, then we have a major resistance area here, and the resistance is this price action level here. So towards the end of the day yesterday, the market strongly rejected that price, but did not continue lower. In this case, we are seeing the market still pushing higher, attempting to retest the high that we saw on the 17th of March. So as for now, it seems like we have a market that is really attempting to push higher. But then we all know that with the Fed choosing to hold rates higher and the inflation being a big threat, then at some point we should be seeing the market moving back downwards. So let's be patient and wait for evidence of sellers coming back and look for short selling opportunities, perhaps across board for the Nasdaq, for the Dow Jones, and for the SP 500. So as for Bitcoin, we are seeing a very strong momentum towards the upper trend line. So this week has been pretty bullish. So yesterday, we broke a major resistance area here. So notice how this zone has been pretty tough to break. And then yesterday towards midnight, we had a breakout, and today we are seeing a continuation. So we are already at 86. Perhaps we should be seeing a rally towards 90K for the day as the bullish momentum continues. Then for New Zealand USD, as the dollar index continues, this is no longer playable. So in this case, we are looking at the market basically reversing the previous bullish momentum. So in this case, if we go to the 4-hour chart and then we zoom out, then we know that we had an upper trend line here. The market faced that trend line, was unable to break, and now is making a swing back lower. So clearly, there has been a level right here, which has been acting as a very strong resistance and now turned into support. So clearly for the day, we should be expecting the market to be going for 0.57461 price action level. So the contrast with the yen pairs is that the yen is still pretty strong against other currencies. So while the dollar is strong against the yen, other currencies are taking the shorter end of the yen strength. So from the 4-hour chart, you can see that the pound yen is still taking some beating from the yen, and we are on the verge of a major breakthrough towards the lower side. So in this case, I expect further downside momentum in pound yen. So from the daily time frame, this is how it looks like. So we are looking at potentially a market that just faced a strong resistance here. Sorry. On the daily. Then if you look at the pattern, we had the first rejection here, second confirmation, and now we are seeing acceleration, which is implying some further downside momentum for the pound yen pair. Silver is on the verge of a breakout towards the lower side. In this case, after maintaining this momentum that was almost sideways, we can say that for this period or for the last 5 days, silver has been moving sideways. And now we are on the verge of a potential breakout towards the lower side. So Germany, or the German stock market index, just hit a new all-time high 2 days ago. And now from the 4-hour chart, we are seeing some form of pullback, perhaps even a correction. Remember when the US market was forming corrections, the European markets did not. So we could be seeing the European markets following suit and moving further back downwards. So in this case, if you go to the 15-minute chart, then the idea is to be observing the price action around this area here. And if there is a break below, then that would imply that we go short on the German stock market index or the DAX. So for now, the direct, like most obvious drop would be 23,133. But then what we will be observing is the potential for a break. If there's a break, now that implies a very nice short selling position. So for the Spanish stock market, it just hit a new all-time high in the last couple of minutes. But then after hitting the new all-time high, you can already see it's struggling to break and move higher. So it could be a retest of the previous all-time high, and then we see some form of pullback. So it's one market to observe, and by observe, I mean you observe the next couple of hours to see if there's a drop. If you see sellers coming in, then that would mean that the market pulls back and perhaps retests yesterday's low. So that hasn't happened yet, so we just remain patient and wait for that to play out. But if there's an outright rejection of these higher prices after hitting a new all-time high, then we drop back to 13 to 46, which was yesterday's low. But then if there's a bullish momentum, there will be no candlesticks on the left because it's a new all-time high. So France 40 index opened with a gap to the lower side, didn't close the gap. So we are seeing some acceleration downwards. So perhaps we should be looking at potentially the market retesting yesterday's low, and this could be a key move in the markets. But then we haven't closed the gap. So this creates a gap in our analysis because the market could quickly cross the gap and still continue in the same momentum. So as for USD CAD on the daily, this is what we have. So we had a really strong bullish momentum, which was reversed. And now we are seeing some choppy market on the daily or even on the weekly. On 1 week, we are going down, another week, we are going up, and then back down, and then up, which is creating some form of confusion. And it can be difficult to trade, especially when you are used to trending markets. So for USD CAD, we are seeing the dollar being pretty strong for the day. Of course, Monday is high. Could be a nice target as the market looks to recover from Monday's sell-off. So Tuesday, Wednesday, some good recovery. And now as we get into Thursday, it basically implies we get to the Monday's opening price or the Monday's high around 1.43798. So that's it for the day. Thank you very much, everyone. Thank you for your time. I think I've answered a majority of the questions. So the military spending by the ECB, it basically means that there will be a lot of deficit spending or basically printing of cash, which is expected to weaken the euro further. So that has an overall reverse effect on the euro USD. So if you've been trading the euro USD and enjoying the bullish momentum, then that might be about to come to an end, given the bill that they have passed to reverse the progress on the euro. So we could be seeing the euro now weakening from this particular price action area and moving further back downwards. So this is the second consecutive day where we are seeing the euro weakening after forming this double top, and the potential for a reversal and the euro moving further back downwards is now increasingly high. So still looking at the questions here. So most promising pair to trade, I would go for Euro USD. It's a pretty easy short. From the 1 hour chart, we still expect more of a momentum downwards to 1.08250. I know it's a bit slow. We are used to gold. So Swiss franc and the SNB. Don't know if we have answered that question yet. Is that I'm looking for the USD CHF pair. Okay. So clearly, what we are seeing here is the dollar being pretty strong against the Swiss franc since morning, with a very strong rally. Just a second. So the cut already happened, and we are seeing the CHF being pretty weak. So the combo of a strong dollar this morning and a rate cut by the Swiss franc, by the Swiss National Bank, is creating this outcome in the markets. So pretty big jump. So we could be seeing some further extension. Currently, the market is halting because this is the previous high that we had yesterday. So starting from the daily time frame, we can see that this was particularly a very strong bearish momentum right from the top here. And now if you zoom out, you'd notice this is a market that tends to make some very strong swings. So overall, the dollar has been losing to the Swiss franc, mainly because the Fed has been looking forward to cutting rates. And now that the sentiment is changing, and now we are seeing the dollar recovering from earlier losses against other currencies, then the overall expectation is that the dollar continues to make recovery. So think about it this way. This was a market that was trading in this channel here. A bullish channel. There was a breakout towards the lower side on Monday. Then Tuesday, we go to the target, which would be the previous low. And then Wednesday, we attempt to recover. the market pulls back, forms a double bottom, and now it's pumping yet again, which basically implies that we could be seeing the rally now extending to 0.888588. So in this case, the overall expectation is that this pair continues to rally and gets to 0.888588 after breaking yesterday's high, of course. So just going through some of these questions. So can we expect the dollar to be strengthening going forward? Yes. So the dollar is expected to be strengthening going forward, not following the commentary from Jerome Powell, but rather from market questioning Jerome Powell's commitment. So Donald Trump is questioning him, and now that we know that Trump's policies could potentially increase inflation in the US, and the Fed cannot cut into inflation, then this is fueling bets that the dollar will make some form of recovery. So in this case, I would go with Trump compared to Jerome Powell. Trump is a much more influential figure in the direction that the dollar takes. So hello, Airstream. Great. I can see Clavi the Dawn. So thoughts on JPY pairs. So JPY's pairs have been pretty strong against the dollar and other currencies. Now that we have a strong yen and a strong dollar, it's time to move away from USD yen. It's time to go into the crosses. And as I mentioned, there's various yen crosses. And if there's a weak currency like the Canadian dollar, then the yen will prevail. So the yen has been pretty strong against other currencies. It will be strong against currencies such as the Canadian dollar. So I expect this bearish momentum to continue with the CAD. But for the dollar strengthening, it's time to move away from USD yen and consider pound yen, euro yen, CAD yen, and so on. So a good question here. Aren't tariffs generally good for DXY, even though it may damage the economy since they are inflationary? So think about it this way. Let's say we consider steel and aluminium. Trump has already implemented 25% tariffs on steel and aluminium. So this means that for anyone who is selling steel and aluminium products to the US, they have to pay a 25% tariff, which means that they either absorb the shock or they transfer that to consumer. So most likely, companies tend to like their profits more, so they transfer that to the consumer. How do they do this? By increasing prices. So if there are local manufacturers in the US who produce steel and aluminium, they will have increased demand. And in order to meet this demand, since they cannot just adjust their steel and aluminium production in a day, what they do is that they adjust the prices higher. So in the short run, these tariffs are expected to drive prices way higher than people expect. So as a result, we expect to see a very strong increase in prices, and this would force the Fed to continue holding rates higher. And this is the best case for the dollar making a recovery. So what's the correlation between silver and gold? Gold is majorly used as a store of value. Silver has some aspect of that. Other than that, it's the second most valued precious metal, so they tend to correlate over time. So strong JPY, weak Swiss franc. This is a good question. CHF JPY. So clearly, this is a good idea. You're seeing a very strong yen and a very weak Swiss franc as a result of the rate cut that we have just seen. So this basically implies that we see the market making some strong change in direction. So this started yesterday and today is accelerating. So if you zoom out this chart, then you notice it's one chart that makes some really long candlesticks. Which basically implies that we could be seeing some further downside momentum. So the most recent swing ended up here, 168.017. So from the forward chart, we could be seeing some further downside momentum. if we happen to break below the current level. So good chance that we see 168.017, given the strength of the yen and the weakness of the Swiss franc as per the rate cut that just happened 30 minutes ago. So as for Brent oil, US oil, when we cover Brent oil, we don't cover US oil. Remember, we try to save as much time as we can. There is like a 98% correlation between US oil and Brent oil. So when we do an analysis on Brent oil, it's almost the same as UK oil. So in this case, we are still in this triangle. We don't have a breakout yet. So we remain patient until we see the direction of the break. So that's it for the day. Thank you very much, everyone. Thank you for your time, and I hope to see you on the next session. If you don't have a trading account, check the links in the description below and register for that account. If you're watching this on X, visit fxpesa.com, register for a trading account. And of course, if you're just learning, go to the Novice to Pro series available on FXPesa YouTube and get to learn about trading. So outside of that, we have the Bullish Banter podcast. I don't know if you have checked the latest episode of the Bullish Banter podcast. So I'll be sharing this. So just want to get to the channel here, the FXPesa channel, go to podcasts, and then check Bullish Banter. So yeah, we have a new episode coming up later in the day, and this will dive deeper into the current events of the markets. So if you haven't watched the podcast, make sure to check it out. You are most likely to learn something new or two, and hopefully, if you enjoy the content, then share the podcast, and we'll have more progress from that. So outside of that, I'll be inviting you to yet another event. So FXPesa tends to hold out of events for financial literacy and try to educate the market on what's happening. So in this case, I'll be showing you one thing. So for the ladies in the house, we know that we have the Let's Make Money Honey event. So this is happening at Trademark Hotel Nairobi this Saturday, the 22nd of March from 11 to 12:30. I think it's a premium event, so it has tickets. So you can book the ticket from this link here. So this is a FXPesa handle on Twitter. Then as for the premium event, we have a free trading classes in Kampala, sponsored by FXPesa. I'm looking for one more. Where is it? Yeah, this is right here. So FXPesa will have another event, and this is between the Financially Incorrect podcast and Love and Money podcast. RBD is 2,000, and if you pay the gate is 3,500, and this is happening on the 29th of March 2025. So this will not be about trading. It will be the conjunction between love and money. So it will be a discussion about money, how we spend our money, how we get our money, and then how we treat our money in love, and the conjunction between the two. So the Lavington Inside Out Edition Sports Rights, the Unmissable Love and Money Festival by Financially Incorrect and sponsored by FXPesa, where life's two most powerful forces collide on one extraordinary change. So join us for storytelling, stand-up comedy, and more. So make sure to sign up, and once you sign up, hopefully you get to enjoy the event. So that's it for the day. Enjoy the rest of your day. I hope that you have a profitable day.